Here at Truepoint, we are tax planning all year for our clients. That really starts in the beginning of the year, and I think that's true for anyone doing their own taxes or doing their own tax planning. So in the beginning of the year, that's really the time to, if you're an employee, check your pay stub, make sure everything looks good from a withholding standpoint. Does it look like your tax withholdings are in a good range for you? Looking at, have you maximized your deferrals, like your 401k, HSA, all your elections look good. That's a good time for all of that. And just looking ahead throughout the year. Say you have equity comp or something of that nature. When are the expiration dates for your exercises? Are they this year? Are they next year? Could it make sense to do that this year? What do you think your salary is going to look like, and could it fit in? Or you might want to decide, do I want to put my money in a Roth 401k or a traditional 401k? Many employers now offer the Roth 401k. That can be a really powerful savings tool. It's tax-free growth. You just don't get the deduction in the current year. So depending on your specific situation, if you're younger, that's generally a great choice. Looking at your tax rate, do I think I'm going to have a higher tax rate later in life? If I do, then definitely the Roth 401k is a way to go. So you just want to balance those and make that determination. I think the beginning of the year is a good time to really consider your financial picture as a whole and think about the strategy early on so that you're, broadening your options as far as recognizing income or taking deductions, just taking stock of that before you're too far into the year. And then again, honestly, at the end of the year, toward Q4, that's another good time to kind of look at your year. You know what's happened. If there were surprises that you didn't expect, that can always happen. If you have a portfolio with capital gains and dividends, you may not know what those were going to look like. And then at year end, you can say, hey, I can plan around these capital gains and make sure I'm taking advantage of getting those at a lower tax rate. Or I think I have room to actually recognize maybe more income at a lower rate. So for instance, I could move money from my traditional IRA to a Roth IRA. The other thing is charitable giving. So do I have enough deductions to itemize? So certain deductions like state and local income taxes, charitable contributions, medical expenses, those are all itemized deductions, and you have to get over the standard deduction threshold for that in any given year. So looking at that, do I have enough to itemize? Should I be doing more charitable giving this year? Do I want to do that before the end of the year? Did I support the organizations I care about already, or do I need to do a bit more of that? So those are all good things to think about at year end before you don't have the opportunity anymore, because most things do have to happen, before 12/31.